these kind of things? Because a lot of people think that, Dave, and how many times have you heard this, and James Turk has done analysis on the gold ETF and silver ETF, is the example that you just pointed out. It really gets down to how we got fractional reserve banking, where the gold merchants in the 14th century said, they'd store gold for people, and they thought, not everybody has or wants access to their gold. Maybe we could start lending this out and multiply it so you have a situation here in silver where you may have 2 or 3 owners to that silver. So people are investing in things they really don't have a direct relationship in terms of ownership. In other words, there's multiple owners, and what happens if there's a call on silver?
Absolutely. I mean, let's call a spade, and I know you will, Jim. I know you very well. I mean, basically, we're looking at a derivative here, and all that's promised, and I have to be fair here, I mean, all that's promised by the ETF is a cash settlement. I mean, people get kind of upset that, they read James' work or Trace Mayer's or something I've written, and they get a little bent that, maybe the silver's really not there. Well, read the basics. The basic is, no matter what happens, you're going to get paper no matter what. Well, look, I have taught from the beginning that if you want something outside the system, the only thing that you can buy are silver and gold. You have to buy precious metals. That's the only financial asset. I've also pointed out numerous times that the only financial assets that have derivatives that are treated like money, and what we consider money today, are gold and silver, meaning specifically that they're the only things that have a derivative exposure of 100 to 1. And that is, for every ounce of silver and every ounce of gold, there's 100 claims against it. And that's pretty easy to prove. I've written about it in the past. You can go in the archive section of my website and dig it out. But the amount of paper that flies around the LBMA, the London Bullion Management Association, on a daily basis is so unbelievably huge relative to the amount of physical gold and silver that exists, it's almost a joke. And yet people take this as like, the London fix. Yeah, it's the London fix, all right, let me tell you.
Well, one of the reasons why we've always talked about why any portfolio, if they want to have it in metals, and especially with the amount of money printing and devaluations that we're seeing occur globally, you start out with bullion, and that's one of the reasons, basically, Dave, we're getting in the bullion business because for the very same reason. There's too much paper bullion out there versus real bullion out there. And you always wonder if there's a real crunch and a call on this when you have 3 different owners, as you do, or 5, who knows how many owners on these silver or gold ETFs. What happens when there's a call? Who really owns it?
Absolutely. And, I don't want to be too hard on the ETF. I mean, as far as I'm concerned, and people have asked me again and again, and someone's probably listening to our show and saying, well, David, be consistent here, so I'll back off a bit. I've always stated if you have a physical bullion position that's big enough to really protect you and your family, and you want to go out of that boundary, and you want to, do something with the SLV or the GLD, well, go ahead. I mean, I don't really have a big problem with that, as long as you understand what you've just said fundamentally, Jim, that it's not a silver investment, it's not a gold investment, it's a derivatives investment on silver and gold. As long as you understand that. But if you think for 1 minute that that's a gold or a silver investment, I've got news for you. It is not.
Oh, and here's a question that we always get from a lot of listeners, and you see the standard advice that is given out, well, how much should you have in precious metals? And you used to hear a 5% holding, but it was interesting. I interviewed Dr. Mark Faber a couple of weeks ago, and I asked Mark that very same question. And Faber said, well, it depends what you have. If you have land, farmland, or something like that, maybe you need less. But if 100% of your assets are in paper assets, he went as high as 20%. So what do you think people ought to have?
Well, I've said, when I was asked to write the silver summation, the 10 rules of silver investing for the Silver Investing Rules Book of the United Kingdom, at that time, which is like 9 years ago, I said 10%. About 2 years after that, I said 20%. And the reason I said 20 to everybody, my readers especially, was that I saw a war environment, and this is well before the war in Iraq started. On top of that, I got even better information, and I know you have it as well, Jim, and that is the Ibbotson study that was produced by BMG, Bullion Management Group in Canada, Nick Bereshev's company, that hired Ibbotson to independently look at what the correct portfolio weighting of precious metals. Now, we're not talking mining companies here. We're talking about physical bullion you own, what this whole discussion has been about. And the correct amount is around 15.5%. So that's right in between my two numbers, 10 and 20. So I'm saying, 20 today, you got to have enough to make a difference. I mean, if you look at what happened in 1980, which is, I believe, a precursor to what we're going to see probably in the 2011 or 12 time frame, where everybody that can is rushing into the precious metals, I think this time it's going to be a whole different scenario. I think it's not only going to make the 1980s look like a warm-up, I think it's going to be a condition where people that actually want to buy physical metal aren't going to be able to. I mean, you got to remember, when silver hit $50 the ounce January 21st, 1980, and it's all blamed on the hunts, which really is kind of a diversion, there was about 1.5 billion ounces more silver available than there is today. You also have to take into account M1. I'm not talking M2 or M3. I'm not talking MZM. I'm talking M1. I'm talking cash and checkbook money. It's about 7 times as great now as it was in 1980. And the last point that I think is the most important point is that we have the Internet today, and it's a worldwide phenomena. So when this thing, the dollar starts going south and there's a buying panic into the precious metals, and what percent of the world's population wants to move into these things, can you imagine what the paper price might be on gold and silver at that time? I mean, come on. It's time for the American people to wake up. I'm basically telling people, you kind of alluded, what do you do now? Jim, what you do now is you buy your physical position regardless of the price. Look, gold coins are going for about $100 an ounce premium. That's cheap compared to what I think is going to happen over the next couple of years. If you don't have any, buy it. Don't worry about the price. You're not buying it based on it's going to go up or down. You're buying it because you know you're going to need it. Silver is basically the same thing, and the spreads on silver are even greater. Right now, I've talked to the main wholesalers in the country, most of them. I don't know them all, but I know most of them. And there has been more inventory available here recently, which is good. It means that you're able to buy gold and silver now without as much pressure on the market and as big a spread as you were having a few months ago. But I wouldn't hesitate. I would say you got to dive in now. As far as the mining equities are concerned, I got a little bit different view on those. I think you should take a long-term approach and dollar cost average in for the rest of the year. And I think in 2010 or 11, you're going to be extremely happy with that. If you want to try and pick a bottom, go ahead. It's tough to do, as we all know.
All right. Well, listen, Dave, if our listeners would like to follow your work, please give out your website, if you would.
It's www.silver-investor.com, and I'm trying to put some videos up like you're doing on your website. By the way, Jim, I really like what you're doing there in the energy sector, and I love the fact that you educate people as well, and I try to do that myself. I have a new video that I just gave the okay to my webmaster on. It should be up this weekend. It's a little background on, it's a little bit funny, too, on myself, and it's one of my long-term subscribers. This guy's a professional investor, and he doesn't pull any punches. He tells you where I've done well and where I haven't and that type of thing. So it's fun to watch. You get to the end of the video. It's about 3 minutes long, and we have a special offer for everybody that's listening to our show today. So if you watch the video on silver-investor.com this weekend, wait till it completes. 3 minutes long is all you got to wait, and you're going to see a special offer come up in your browser.
All right. Well, listen, Dave, thanks for joining us on the program. Have a great weekend.
Well, thank you so much, Joe.